Ladies and gentlemen, welcome. This is your watch list for Wednesday, January 11th. I put these videos out for you guys for free every single day, unless I'm sick, of course, then you guys don't get them. But I do try and put them out every day, and I do succeed probably 98% of the time with that. So this is the watch list for Wednesday, January 11th. This is the easiest strategy that you guys will come across. There's no indicators. We use the candlesticks. Every candlestick tells a story. You need to learn how to read that story, and as soon as you do, this stuff becomes really, really simple. I do give out top fives from this list. Those go to the Griswold Gold members. How do you become a Griswold Gold member? You can go to the link in the description below, and there's a link to become a member, or you can go to the Discord. And basically everything that I offer for free or fee-based can be found in that Discord. It is a trading Discord. It's free to join. That's where the paid membership takes place. So it's $50 a month, or you buy 2 months, you get 1 month free, and you get a 1-hour strat course, 1 hour to learn this strategy that we teach here. It gives you the top 5 from this list that I put out every day. It gives you live trades throughout the day from the live trade bots on ticker symbols like SPY, QQQ, Disney, DIA, Tesla, and a bunch of other ones. And it gives out a bunch of other really great stuff, one-on-ones with myself, and a bunch of other stuff. So make sure you go check that out. Let's go get started on this list. We're going to start with SPY. I also am on Twitter. You can find me there at Mr. Clark Griswold. So SPY is the first one on this list, and I always tell people as long as SPY has a setup, it will be part of the top 5. So you can be assured that this one will be on the top 5 for the Griswold Gold members today or for tomorrow. So SPY has a 2 down that finished green. And the other thing that comes with that membership is the Strat indicator for TradingView. Now, you can purchase it separately. It's a one-time fee. It's $25, but it gets you all the Strat indicators wrapped into one. So these candlestick numbers, this time frame continuity here, these yellow inside bars, the white outside bars, the 3-1 setup golden pattern here, the double inside bar blue pattern. But as we go through this, you'll hear a little bit more, but we had this 2 down that finished green. So a 2 down is a directional candle. It only breaks the low of the previous candle. So this candle only broke the low of the previous candle. Therefore, it is a 2 and it's a down. But it finished green. So when it does that, it gives me a much higher probability that we are going to trend back to the upside on the next candle. And I don't know that that's what's going to happen. We're basing this strategy, and every strategy, guys, is based off of probabilities, because nobody knows what the next candle is going to be here on this chart, on the hourly chart, on the 1 minute, on the 5 minute, on the 3 month. No one knows what the next candlestick is going to do. We don't know if it's going 2 down, 2 up, inside bar, outside bar. So based strictly off of probabilities and high probability setup. So you notice the time frame continuity is all green. So what that's telling me is it's a high probability that this is going to trend to the upside. Especially we're day trading. When I'm day trading, I only really need this hourly and this daily in the same direction. Everything else is a bonus. If the week is green and I'm looking for a trade to the upside, that's a bonus. The month, the quarterly, the yearly, that's all a bonus. And what I mean by that is it just gives higher probability that this trade is going to work out in our favor. So 2 down, and it's not a red, not like this one. This is a 2 down red. This is a 2 down green. So it's a failed 2, and I'm going to look for this to trend back to the upside. So we can look for calls with a trigger of 390.65. Now that's not the strike price. The strike price I would be looking at 391, 392, 393, something in that range. Now we mark our targets out at the top. If it's a call, if we're looking for it to go up, we mark our targets out at the top of the preceding wick. So here, and the next preceding wick is here, and then the next one would go there because it's a gap fill, but I'm sure we'll find one and I can explain it a little bit better. But that is SPY. We're going to move on to Ford. Ticker symbol F, 2 down green, hammer candle, meaning we have this big body with a long wick to the bottom. Basically looks like a hammer. So again, time frame continuity in our favor. We're going to look for calls on this at 1287, first targets at 1293. And then we can mark out additional targets. And again, here's another one that I was talking about. We have it at the bottom of the candle because we have a gap. There's no candlestick between here and here. So when we have that, it's called a gap fill, and that gap fill becomes our target, and then the next target would just go to the top again. And then here's another gap fill, so it goes to the bottom. Ticker symbol C, that's Citibank, 2 down, finish green, full time frame. We can look for calls at $48.19, sorry, 21 cents. First target at $48.32. We'll move on to Walmart. Walmart, I'm actually going to take off of here, and we'll move on to BAC. BAC, again, 2 down green. We're going to look to trend back to the upside. Everything outside of the week is green, so we're going to look for calls at 34.27. First target at 34.76. Caterpillar, not something I usually have on here, but we have an inside bar. So let's talk about the inside bars. The inside bars don't break the high, and they do not break the low of this previous candle. They stay within the range. It's a tightening range. It's consolidating, and you get this yellow candle from my indicator that I created. But when you see that yellow candle, I want you guys to think of a spring being tightened, loaded, compacted, squished, squeezed. And when you release that thing, you're expecting a big explosion to one direction or the other. And I'll show you what I mean. And I like to go back in time to test this stuff. And really, if we go back and look, this inside bar, it was a gap. This inside bar was a gap. But they both had really big breaks to the upside off of those gaps. Here's another one. It gapped straight up. So could we see a gap on CAT? It's very possible. Here's another one. Opened, and looks like we just hit targets and then came back through. So did what it was supposed to do. Now CAT, I don't normally have on my day trade setups because the premiums are higher and the spreads are wider, meaning the spread between the bid and the ask has it's further apart. So that's why I like ticker symbols like SPY, Ford, Citibank, NEO, and most of the tickers that I'll give you guys have those tight spreads because I buy market and I sell market. I don't want to wait for these limit orders to be filled because sometimes these plays run in a matter of a minute or 2 minutes, and I don't want to wait on the sidelines and miss out on my trade. Now, there's nothing wrong with missing out on a trade. You just move on to the next one, but if I can mitigate that by buying market orders on tight spreads, then that's what I'm going to do. But CAT has this inside bar. You can look at playing it on either side. And we'll have another inside bar, and I'll talk a little bit more about it as we go through. But Comcast, CMCSA, 2 down, finish green. We're going to look to go back to the upside on this. Calls at 37.93. And this inside bar that precedes it, this is what we call a 1-2-2 rev strat. So a 1, 2 down, 2 up rev strat is what we're looking at there. We'll move on to the diamonds, DIA. DIA has a 2 down that finished green, so we'll look for calls at 337.23. First target at 339.41. That's good magnitude. It's a good amount of room in between the trigger and the target, so we have room to make some profit there before we hit the first target. Here's another 1-2-2 rev strat off of eBay, so we can look for calls at 45.13. First target at 45.44 on eBay. Google, 2 down, finish green as well, so we can look for calls on eBay at, what are we at, 89.48, first target and second target marked out for you guys there, the 2 green lines, the tops of the preceding wicks. IBM, 2 down, finish green, time frame continuity in our favor again, so calls at 144.80, first target at 145.47. We move on to JP Morgan. Here's another one of those inside bars. So I was going to say, I always tell people if you're struggling or you're new to trading, inside bars are always what I recommend. You can play both sides. They're easy to see. They're easy to spot. And that's when I started becoming actually successful at trading options, inside bars are what I looked at. So we can look for calls here at 138.72 or puts at 137.31, targets marked out. Here's an example of an inside bar. This is another one of those hammer candles, and we just ran off it. Hey, we triggered, we hit target 1, and we didn't hit target 2, obviously, because it was way up here. But this was a really good trade off of that inside bar for JP Morgan. We move on to MU, also with that inside bar. So MU, we look for calls at 57.28, first target at 57.52, and the trigger and targets marked off to the downside for MU there as well. QCOM, inside bar on this as well, or a 1 bar. So calls at 116.97, first target at 118.85, good magnitude. And I will tell you this, guys, a lot of times what happens when you don't have a lot of room between the trigger and the target, this is what we'll get. Let's say we open up right here, okay, and we start trending down, we come through that target, then it reverses, okay, and you'll never see that target again, and it'll end up coming back up the other way. So that's why I tell you guys, be very, very cautious. I'm not saying that this thing can't run to the downside in any capacity, but just be cautious that once we hit those targets, be prepared that if it runs back through that target in the opposite direction, that you're taking your profits there. Don't rely on hope. And that's where a lot of traders go wrong when they're looking at this stuff, is it'll reverse on them and they'll hope it goes back up, and they won't take profit, and they'll just continue to run into the red, and they'll end up losing their money on their trade. And most traders do a 180 of what they're actually supposed to do. So you should let your runners run, let the candlesticks and the target stop you out, and cut your losers. But unfortunately, people let their losers run because they're hoping it comes back, and they cut their winners because they feel like, I finally got in the green, I need to get out of this trade. And then they miss all their profit on that trade because they cut it for 5, 6, 7% because they're just happy that they got 7% instead of a losing trade. So if you can flip that mindset on you, that's one of the main keys, one of the main cogs to become a successful trader. And it comes down to psychology, really, guys. So we move on to QQQ, 2 down green. We'll look for calls at 272.83. First target's marked out on the Q. XOP, 2 down green. This is a true hammer candle here. This body here with a big long wick to the bottom side. This is on the Spider Oil and Gas ETF, so we'll look for calls at 133.79 and good magnitude to the upside on that XOP play. Apple, another hammer candle here. So actionable signal, a hammer candle, or a shooter candle like this, or an inverse hammer, also an actionable signal, or a inside bar. All three are considered actionable signals. And once we break those hammer candles to the upside, shooter candles to the downside, that puts us in force. So you'll hear that term a lot. We go in force. And that's as soon as we break that trigger, break that plane, that puts us in force on the trade. So Apple has time frame continuity right across the board, all green, hammer candle. We'll look for calls at 131.26 and good magnitude to the upside. AMD has this inside bar, time frame up, calls at 68.15, puts at 66.56. We'll see how AMD plays out on Wednesday. BIDU has another inside bar as well, so we'll look for a break off of that inside bar. Here's another fantastic run off of this inside bar, fantastic run off of this inside bar. This one opened up here, gapped up, and then trended all the way back down. So we'll see how this inside bar plays out. Calls 135.60, puts 133.07. We move on to Cisco. Cisco also with an inside bar. The difference with Cisco here, I doubt we hit that target, but the high of this candle right here, the previous candle at 49.21. Where am I getting that from? Up here, over here, and that's, I'm looking at this H right here. So when I hover over top, you'll notice that H, 49.21. When I hover over the inside bar, you'll notice the H, that's the high, 49.21. So we obviously can't have a trigger and a target exactly the same. We can't trigger and hit our target at the same time. So target gets moved up. We've got calls at 49.21, puts at 48.59 on Cisco off of the inside bar. D-Dog, that's Datadog, 2 down green. We can call that a hammer candle. We'll look for calls at 66.70 on Datadog. Disney, inside bar on the Disney with 95.64 triggers for calls and 93.82 triggers for the puts. INTC, again, full time frame continuity here. This is very important, guys. Don't push this by the wayside. Time frame continuity is I don't want to say it's the essence of trading this strategy, but we base our trades based off of time frame continuity. If we don't have the continuity, we don't take the trade. So you can, there's nothing saying that you can't, but the higher probability trades happen because of time frame continuity. So inside bar, hammer candle, so we have two actionable signals here on Intel. Calls at 29.51, puts at 28.92 on INTC. NVAX, Novavax, inside bar on this one. Calls at 12.72, puts at 11.84 on NVAX. NVIDIA also with the inside bar, time frame in our favor. We're 2 up on the week already. That's these 2 pink lines here. I believe was that an inside bar on the week for NVIDIA. It was an inside bar, and we broke to the upside. We gapped, and we're just continuing to run on this inside bar. So let's continue that trend on NVIDIA, and hopefully this thing trends to the upside with time frame continuity. Calls at 159.62. You can look to hit that target there, and you can put in a second target right there. Oracle 2 down green. We're going to look for calls on Oracle, 86.61. Starbucks 2 down green. We'll look for this to trend back to the upside with calls at 106.43. First target, 106.68 on SBUX. SE, that's C Limited 2 down green hammer candle. We'll look for calls on this at 54.34 and good magnitude up here, meaning good amount of room, good movement between our trigger and our target on SE. If this stuff's helping you guys out, make sure you give me a thumbs up. Make sure you're following along. You can subscribe down below, but hit the bell. The bell will send out notifications for when these videos actually come out. And I've got 350 plus videos for you guys to learn this stuff. So it's not just these setups particular every day, guys. I teach you guys exactly what I do every single day, exactly how I trade every single day. That's what this channel is for, so you guys can replicate that and you guys can do it on your own. Okay, XL Energy, full time frame to the upside. Calls 72.19, put 71.74. XLU 2 down green with the hammer candle. We'll look for calls at 71.54 on the XLU. And XOM, guys, another hammer candle, inside bar hammer candle. So calls at 110.33. Good magnitude to the upside for this on the first target at 111.64. We can put a target to the downside. If we trigger that downside, 108.01 is the trigger for that. Guys, hopefully this stuff is helping you out. There's videos at the end to help you out as well, so make sure you guys check those out. Good luck trading on Wednesday, guys. I wish you nothing but the best. If you're brand new to trading this year, welcome. I'm here to help you guys out, so make sure you guys are asking questions, and we will see you guys all on the next one. Bye-bye.